Hi everyone, my name is Stu Boynton and I work for US Bank, and I just wanted to say thank you to this organization for inviting me. It's a true honor. I'm a Vice President of Business Banking Relationship Manager. I started my career with US Bank over 12 years ago. I think Sunita's right, maybe 15 years. I've been a top producing banker in that time. Recently, I was the top 1% in the nation at US Bank. Yeah, thank you. And because of that consistency and being with one bank, I have not had the opportunity to work with any other bank. All my experiences here at US Bank, and that has allowed me to understand credit. It's also allowed me to understand what US Bank is really good at, and that's what I'm going to present today. So these are the properties that US Bank is really good at lending on. I put the multifamily apartment buildings on top because that is our bread and butter. I mean, we really have a strong appetite in multifamily lending. I've been here over 12 years and our appetite has not changed around that. We also finance owner-occupied real estate, strip centers, mixed-use properties, and industrial warehouses. Of course, I wanted to lead with multifamily because that's most of my business comes from that. We finance anything with 5 or more units. At US Bank, when we're dealing with 4 units or less, we tend to send that to our residential department. At US Bank, we're only financing stabilized properties. So if the property is vacant, we really don't have the appetite for it. We want at least 80% occupancy. We don't do ground up construction, but we do new construction. So if your client or yourself just built a building and you have leases in place, we do have the appetite for that. And we wouldn't need historical financials, but it's best that we do have historical financials. And when we're dealing with multifamily apartment buildings, we're just, if it hits our cash flow requirements, we're only asking for 20% down. I know some banks require maybe 25 to 30%, but we only require 20% down. We do have a huge appetite in owner-occupied real estate. That means that the business operates out of the commercial space or the industrial space or the warehouse space. On the conventional side, we just need that business to occupy at least 40% of the space. In some situations, the owner may lease out the remaining space to other businesses, which is totally fine with us. And then that would require 20% down. Loan sizes, we do get very competitive in this space because under $1 million, we don't have to do a full appraisal on these types of properties. And then if you do want to purchase something larger than $1 million, we would have to do a full appraisal. But under $1 million, very fast process, no loan fees. The only loan fees that you're going to pay is title. And then we are an SBA preferred lender. SBA has different guidelines. We're an SBA preferred lender, like I said, and these types of loans require the business to occupy at least 51% of the space. And normally, we can get just 10% down and sometimes 5%. So we do have awesome SBA options. Like Sunita said, we do commercial strip centers. Again, we'd like to see them fully occupied, at least 80%, 20% down. If there is a restaurant inside the property, I'm not talking about Subway, if it's a national chain, we're gonna treat that differently. But if it's a mom and pop restaurant, we usually require at least 30% down, just higher risk. And then note that smoke shops and adult stores or office is not really in our appetite right now. So if the property holds one of those, I'm not saying we can't do it, but it is, underwriting has more eyeballs on those types of opportunities. Mixed use properties, we love them. This means that the retail is on the first floor and then residential units on the second floor. Again, we want these properties stabilized, 20% down, and then again, restaurants, 30%, just because of the high risk. Usually restaurants, and when they're mom and pop shops, don't have a longevity in some cases, sometimes not, but that's why we would require 30% down. And then industrial properties. This has been a main focus of mine recently. A lot of my borrowers and their investors want to find these types of properties because the tenants inside these properties are very strong, and most of the tenants paid most of the expenses on the property. So it's a very good investment, and these types of properties only require 20% down. And then cash flow, at US Bank, we look for a net operating income requirement. So the income divided by expenses have to hit our threshold. During the cash flow process, we really have a huge appetite in lending to diverse individuals. And I could show that form here in a minute. But if you do qualify as a diverse borrower, our cash flows are a little bit different, and they help those types of individuals because we want to, at the end of the day, lend to more diverse people. And then what we're really looking for is strong W-2 income and real estate experience. Not all my deals have strong W-2 income or real estate experience, but the majority of them do. It's just an easier process through underwriting, but again, we will look at any opportunities if the property cash flows. And then the loan process is pretty straightforward. We tend to want 2 to 3 years of the property's financials, 2 to 3 years depending on loan size from the borrower and their business. An application, a personal financial statement, a current detailed rent roll, and then a business diversity form. And this is what the business diversity form. So we just want to include these individuals, including veterans, women, and we just want to be able to lend to more people. This is an example of how we look at cash flow. So this is I think it was a 10-unit building that I recently financed. As you can see, the first column is what the current rents are and what the expenses are. So this is how we debt service these properties. The loan size was at $1,650,000. So the 20% down was roughly $1.3 million. When we're looking at the property, we hit the property out of the gate with 5% vacancy, 3% reserve, and 4% management. And this is just a conservative estimate of what it would take to run the property. And then we hit the property with the current taxes, insurance, and any other expenses. And if you look at the bottom where it says coverage, that number has to be at a 1.25. If it's a diverse borrower, we're looking at a 1.2 cash flow. And as you could see, this property is pretty strong at 1.47. So when submitting this type of loan, it was very easy to get done. And then the loan process timeline, it usually takes about 45 days start to finish. It does really depend on the loan size. So if we're looking at a D&I property or investment property at $500,000, we require no appraisal, And the desktop evaluation is usually done in 10 business days. So we could do a fast turnaround time with loans 500,000 or less. 500,000 or more, it does take a little bit longer. We would require a full appraisal that takes about 3 to 4 weeks. And then underwriting decisions around 7 to 14 business days. There are environmental reports when we do loans over $1 million, so it may impact the timing of loans. And again, here's my contact. You can always reach me by phone or email. I have business cards if you want me to hand them out. Again, I look forward to working with this organization, and I really appreciate the time that I could share what we do well here at US Bank. And I'll open the floor to any questions that I can answer. If not, thank you very much.